Good day, all. Ira Epstein of Linn Associates with your agriculture update for this Wednesday, the 13th of February, 2019. I want to remind everybody before I get too far, we're going to have our live webinar tomorrow, and in that webinar, you get to ask all the questions you may want of the different markets. It gets to be a lot of fun. We bring up long-term, shorter-term charts. We'll talk about things like stochastic readings, Bollinger Bands, bring up your different questions. Now, the invites have all been sent. If you didn't get an invite, it means you're no longer on my mailing list. That means you got to call us. Give us a call at 866-973-2077. We have a large amount of people that have signed up for it, so call sooner rather than later. You may not be able to get in. It's really that simple. All right, so in the market today, we're still dealing with weather. A lot of write-ups at the end of the day, and wheat said that the market had a bounce today because of the bad weather in the Dakotas and Minnesota, so you're still getting that. We have another storm system coming in as well. One of the things that you got to put into the back of your mind, though, is what's going on in the dollar. The dollar's ready, from the looks of it, to challenge the 9,700 level. You got under the 113 level in the euro currency. The pound is down. Just about all the currencies you look at taking a beating against the dollar. Now, that doesn't help price our grain or our products very efficiently, especially in economies around the world, be it Europe, be it Asia, that are slowing down. And believe me, we're seeing that slowdown occur. As you look at a weekly chart of beans, they're still up for the week, basically 2 cents, so they've gone nowhere. That's really the right way to look at it for this week. And you almost see that right here. These are markets that are just whipping back and forth, going a big fat nowhere at this point in time. Overall, you still have the pattern of lower highs and lower lows. We did set up a bear trap. I went over it the past 2 days here. Whether the market will be able to pop from here is going to be the big question. I think you can see the battleground for the past week, I'm talking 5 business days, has been the 18-day average of closes in red, which is so often where a market decides whatever it's going to do from that particular level. The resistance comes in at 926 1/4. The support, the lower Bollinger Band, which you got down to yesterday, coming in around 907 1/2. Momentum in the market, you've got divergence. The momentum is trying to move up. Prices are trying to hold or move down a little bit. You got a mess on your hands in this chart. It's really not doing a heck of a lot. I was looking today for a rally back in the March meal to the 18-day average of closes once you had lost the embedded reading, which you lost on Tuesday. And if you'll notice, for all purposes, you did that today. By the way, I'm going to start switching over as early as Monday for you to the May contracts in the grains, but I figure we should end up this week with the Marches. You can see when you lost the embedded reading in soybean oil. We were talking, would the market get down to the 18-day average of closes, which is often, the word is not always, often the target when that occurs. Whoops, let me come over here. You can see it just missed it yesterday, but today it made me look good. It came right down to it. In the corn market, we're in the middle of no man's land. We almost every single day hit this 18-day average. We have probed the short side of the market, not me, the market has, gotten itself down to the lower Bollinger Band, and each time the market gets thrown back up and back to that 18-day average where you're at now. Now, momentum is up. Where the close is today, you've got the bias up going home, resistance right above us at the 378 3/4 zone, and then we have the bigger level, which is around the 382 resistance. In the wheat, we had absolutely no follow-through. Going home, I thought the market looked on the bear side, to be honest, looking at lower highs, lower lows. What you didn't want to take out was 522 1/4, and I realize it's going to be right into the resistance of the 100-day average, but it would break the chart pattern and might turn momentum up, and it's exactly what occurred. The momentum's trying to turn up. As you can see, the market closed right on that 100-day average. If it slips, it might find support there, but you're out of the pattern of lower highs, lower lows. You have no pattern. You have a lower low, a higher high. That's not a trading pattern as far as I'm concerned. It's similar to sugar, which can't get itself away from that 18-day average either. No matter which way you're trying to catch a position here, traders are frustrated. You know, we have a lot of people that trade the soft commodities, and on our QT platform, I don't know if you know it, we have our futures line. And I listen to Paul Hare talk about it quite a bit, and it's just a market that refuses to pick itself up or down one way or the other. In the coffee, you still have the lower highs, lower lows. They keep talking about weather in Brazil getting hot, but I'll tell you, this is February. That whole crop can be rescued that's been in somewhat of a problem. You'd have a sign that the market has maybe reached a point where it wants to bounce if you get over this 101 and a quarter, because it would break the pattern of lower highs, lower lows. What is going on is the market decided on this challenge to just sit on these Bollinger Bands and not get away from them. That's called pushing them out, and it widens the trading pattern. Because you're still nowhere near embedding, just oversold, if you take out 101 and a quarter, it might mean that the market gives a shot at trying to get back to neutrality, that 18-day average. But here too, by the way, in the March coffee and the March cocoa, I'm going to move to the May contracts for you on Monday, so be ready for that. In the cocoa, it's contra-seasonal move. It's getting lift right now with higher lows, higher highs. The bulls have grabbed back control. The support zone's 22.33, the 100-day average, to 22.26, the 18-day average of closes. Today's low is an important number, as it's an outside day up. If it's broken, it will change this chart pattern and throw it back to neutrality. How's that? If you can get more of a lift, 22.94 is a possibility, the upper Bollinger Band. In the cotton market, like you're seeing in these other markets, here was a market that was going sideways. And oversold, starts challenging the lower Bollinger Band under it. Now, normally, if you're not going to move that band out very much, you snap back right away. It's not what occurred at all, kept dropping and still doing so. So this is a market that is using this power to break down to lower levels, and it has shown no sign that it's ready to stop that. Cattle's at an important juncture. I think if it gets under 126.62, the uptrend will be lost, because you would then have a pattern of a higher high and lower low. So if you're bullish, you want the bulls to grab back control and get it over that 18-day average before that happens. Momentum turned down, bias down, the swing line up. This market got itself in some trouble on the close. In the feeder cattle, you're right back to where you've been, the 18-day average. Now, you have a pattern of lower highs and higher lows. Again, we're not trending. Momentum, just like in the fat cattle, we call them fat, they're live, but turning down here. And in the hogs, these bounces have just turned out to be no more than that, bounces. However, you lost the embedded reading. And my theory is that when you lose that reading, you're looking for the market to do what? Find a way to get back to the 18-day average of closes. I'm still expecting that to occur. With that, I'm Ira Epstein. I hope to see you at the live webinar tomorrow. Remember, 866-973-2077. If you didn't get your invite, if you got your invite, you better register. It's going to be hard to get in. I'm Ira Epstein. Have a good day.